we will absolutely stick to the same strategy. So the core markets of Denmark and Sweden, the UK and the US are more of the same, focusing on top line growth and driving those recurring revenues in the installed base through those partnerships. But
Hello, you're watching Proactive. I'm joined by Ondo InsurTech CEO Craig Foster. Craig, very good to speak with you. It's been a great 2024 for the company, which really, I suppose, shows in your interim results that were out earlier this month. So all of that expansion is really paying off.
hey, Stephen, yeah, it's good to talk to you again. That's right. We did our interim results a couple of weeks ago. They were very well received by the market. And it's always a good time just to reflect at this time of year on how far we've come. We were off site with the whole team, or all the UK-based team yesterday. And again, just a chance to go through those results and reflect on how far we've come in the last 6 months, last year. But indeed, since we came on the market back in March 2022. Yeah, we've come a long way already and proven we can deliver the results. But again, just scratching the surface on the potential of the business and the excitement in the team at the moment is palpable about what's going to happen into the new year.
And you do say in the results commentary that the LeakBot strategy for US expansion is on track. In fact, you deployed 7,500 LeakBots in the first half of the year to US customers, revenue up 42% to 1.7 million. And since the end of the first half, so going into the second half, you've continued that expansion across the US.
Yeah, I mean, that's really we really feel like we've hit an inflection point in the business in terms of that US strategy. So it was all the way back in May. We did a fundraise to power that US expansion plan. And I think the reason the results were so well received is because we reported back that really that has gone, that has gone to plan and, as well as I hoped it would do. So we executed with 5 insurers in those 4 states. And the first step was really prove that our solution can work in the United States as it has done in Europe. And we absolutely have proven in each one of those cases that it does. Delivered great, amazing customer satisfaction scores that we put in the results deck and importantly, the return on investment for the partners. So the next step after that was to try what our plan was to get a market leader to expand. And then obviously, that went, to be honest, above our expectations with Nationwide expanding into 16 states. And then the next part of the plan was, can we then get other insurers to follow if we can get a market leader to take the lead? And it happened very quickly. So immediately, our existing partners, Mutual Enumclaw, Selective, there was another one, immediately followed them into the same, where they have an overlapping footprint of customers in the different US states. And then we had a new partner sign almost immediately in Indiana Farm Bureau. And that no pilot, just went straight to rollout in the state of Indiana. So a huge amount of activity going on at the moment, a lot of it powered by Nationwide, as all those marketing plans have now started. So the team are just incredibly busy and loads of things, obviously, that I can't talk about in the pipeline, some exciting developments along the way as well in the US. But it's also coincided with, loads of activity in our core markets back at home as well. So we've got the NFU deal that now all the marketing started in the UK. That's about a 400% increase in the addressable households we can get into in the UK. And then similarly in Denmark, one of our partners, Top Denmark, doing the biggest campaign in the new year that they've done so far. And we also recently, on the results day, announced that we signed Arm Brand, so one of the biggest non-life insurers in Denmark. Again, it's doubled the size of our addressable households in the Danish market. So we've got all this happening all at the same time. So all of it was funny getting the team together yesterday because there's so much excitement, but also, it's putting a lot of challenges and things for us to think hard about to make sure we can execute well as we go into this new phase of our growth. But it definitely feels like we're in a different phase, a different trajectory as a business now.
And of course, that prepayment model that you have in place is also helping because it reduces the capital outlay, doesn't it?
Well, this is the thing. So I think one thing is that all the advances that we've made commercially that we've just covered. But I think the other thing that investors have taken well to in the results is obviously with any growing business, especially a recurring revenue business, sometimes the concern can be about how working capital intensive is growth going to be, and is that a restriction on growth? Are you going to need to keep raising money all the time? So two things that have changed is one is we've really figured out, and it was really credit to the chairman and to the board because they pushed us. We all are significant shareholders in the company. We also didn't want to have to keep diluting our own positions and that of all of our existing shareholders to grow the business. So the board were very hot on this idea of let's create a negative working capital model where basically our customers will finance the growth. And as we explained in some detail in the results presentation and pulled apart how that model works, but the quick summary is the partners pay us up front before we've had to pay the factory for the devices. We take that cash and then we draw down against it. But the key is the partners pay for the next order and the next cash prepayment at the point when they've deployed the devices, not when that first prepayment's fully utilized. So as long as we structure the deals that way, that really funds the growth. So that was the first change. The second change is when we spun the business outside of HomeServe, we had this vendor loan note. And we've also done a significant restructure. I believe you sort of spoke to our chairman back at the time about it. So the first repayment was pushed back a year. The interest rate was rolled up and pushed back another year. The end date on the loan was pushed back to 2030. And what all of that means, it's been designed so we can meet all of those obligations from our future trading cash flows. So those two things together mean, there aren't any funding requirements for us to get to that cash flow break-even point and EBITDA positive trading in the second half of next year.
So after a fantastic 2024, Craig, what does 2025 hold in store? You already alluded to more news.
Yeah, well, it's a very exciting time to be a part of this team, and yeah, I mean, we went through that in some detail all together when the team was together. So I mean, it's going to be a really exciting year. The strategy is boring in terms of we will absolutely stick to the same strategy. So the core markets of Denmark and Sweden, the UK and the US are more of the same, focusing on top line growth and driving those recurring revenues in the installed base through those partnerships. But yeah, very exciting deals in the pipeline. So executing those expansion with existing partners, but some really interesting developments going on behind the scenes that I can't talk too much about. But it's going to be an exciting year.
So lots of conversations ahead for us next year then, Craig. Thank you very much for taking the time today.
Thanks, Stephen. If I don't speak to you again, have a good Christmas.
And you. That's Ondo Insurtech CEO, Craig Foster.